tired eyes. I'll soon be with you.
Good morning. Let's look at something. I know we discussed how we should do it, but things have changed from yesterday. So our panel is going to shift to some different discussion. Let's get some number up the stage. Can we get those latest charts? Okay, here you go. Okay, next.
Oh.
Any more charts on the numbers? Only Bitcoin going up? I'm sure the others are also going up. Anyway, before I go to my, oh, here comes. Who put XRP there? Okay.
It wasn't me.
Okay. Anything else left?
Hold on.
Okay. Why should we all get excited about this growing? So before I go to Sarah, who's my comfort zone there, I need to get all four of you to respond. What happened? Why crypto industry is so excited about the event of the day? Start with you, Chad.
Look, I think the Trump campaign had a real crypto theme around it. And there's a sense of all this pent-up demand that could be unleashed by the US being able to turn into a leader from kind of a laggard. And I think that's what happens with the Trump administration coming in. We'll have to see who gets appointed to the different regulatory agencies. But this is a real opportunity for a crypto golden age, I think. It can be very, very exciting what happens for the industry with a lot more regulatory clarity, which is really what people want in the US.
Can I push a little bit on what exactly he said? Something he said that it got this massive imagination of people on the crypto side. I'm sure everybody's holding a wallet, a digital currency in the wallet, voted for somebody. What really he said?
Yeah, well, there's more people who own crypto in the US than own dogs. So, I mean, like, it's not hard to imagine that you're in a position where people really feel like this is something that should be promoted and embraced, as opposed to being, really blocked and inhibited. And I think that is the shift that people are really excited about.
Okay, Eric, why this happened?
Well, I think it started already at the beginning of the year. I think when we got the Bitcoin ETF approved, I think it was a very strong signal that something was changing in the US. Having large asset managers like BlackRock, Fidelity, Franklin Templeton going all into the space, and then following with the Ethereum ETF approval, I think it was a clear direction that was set. Of course, the election is the beginning of a new era. I'm very excited about one thing, is Bitcoin becoming a reserve currency for the US. If that happens, I think it will be a massive signal for all central banks across the world and even corporations. So I'm looking forward to that, definitely.
Okay. You saw your numbers.
I'll add on here. Yeah, the charts from this week are eye-popping for sure, and I agree with a lot with what's been said. I actually think the momentum for getting regulatory clarity in the US started before this week. I think we've seen it all year in a really positive way for the first time in crypto's history. Bipartisan legislation actually making its way through Congress. So I'm optimistic that we will get clear rules for things like stablecoin legislation, and yeah, the momentum's behind it.
Richard, you look very happy.
No, can I have a show of hands? Who owns crypto here?
I'm sure they're all.
Oh, these people are happy, by the way. So, I mean, this is a great week. But similar to what Eric said, since the beginning of the year, 2024 has been a huge landmark year. And before this year, the institutions are not coming in a big way. The regulators are staying on the sidelines. But with the approval of the Bitcoin ETF, first in the States and then in many parts of the world, Australia, Canada, Hong Kong, Brazil, that has given a lot of credibility into this space. On our own, this year, I mean, then the institutions start to come in. Right? And if you look at the top 200 institutions, most of them have a crypto agenda. Some have started allocation. The family office has done it. The endowment has started to do it. on our side, we have seen like 131% increase in just institutional onboarding this year. So the pace of adoption is very fast. Right? So on our platform now, we have close to 240 million users globally. The first 100 million users took us 5 years to onboard. The next 100 million users took us roughly 26 months. For the year to date, this year, we have onboarded about 60 million new users. So you can see it is coming through in a big way. And with greater regulatory clarity in the States and hopefully in many different parts of the world, that pace of adoption is going to get very, very fast going forward.
But this is a follow-up question before I go to Sarah. There are one thing you want to say that we're expecting as a regulatory change, what it would be? What that one clarity we will get from the industry, for the industry, which will make things different? One example.
Well, I don't know if it's going to be just one thing.
Okay, all examples, please.
But there are a number of bills in the US, for instance, that have bipartisan support. And I think if they went through, you would be able to unlock some combination of the crypto markets and the stablecoin markets and change some accounting rules, and you could be off to the races very quickly. There's even a question of whether or not you even need bills. If we could just have different people running the regulatory agencies, they could create the right rules, and you could be off to the races. So, and I think the reason it's so important for the US to do that is because it's obviously a very large financial market, but also it has a common law basis that can be easily understood in a number of other jurisdictions. And that really would then put us into a completely different position. So you could just take the things that have already passed and just turn them into law.
Anybody else come here? One or two examples of which will make this industry more predictable rather than going like this?
I mean, yeah, having a clear taxonomy. I mean, many places, Singapore, UK, others have clear taxonomies for how they're going to treat crypto assets. Gives us more predictability. We understand then what are the rules to follow. The SEC for the past few years has been waging a war on our industry, and it's been randomized attacks where you know, it's really hard to navigate in an environment like that. A really tangible example of, you know, this is about bringing, you know, the next billion users into digital assets is how hard it is for those in the crypto industry to just get bank accounts in the US. We saw how fragile that ecosystem was riding on Signature and Silvergate last year, and it's not much better now. I mean, it's, you know, as Chad was pointing out, like, you know, larger institutions, healthier institutions want to be a part of this future infrastructure, but they don't have the clarity from the US right now.
I see. Now, I don't want to put Bank of England, Sarah, in a very tight spot here. As the regulators, as the central bankers, fellow central banker, what should be our reaction to this changing mood in the US?
So look, I'm not going to comment on the situation in the US, but what I can comment on is the role of regulators in this industry. Trust in money is at the heart of what central banks and regulators are all about. We've done it for years with our own money and with commercial bank money, and what we need to do in a world of digital money is take that same approach to stable coins, to tokenized deposits, to central bank digital currency. And I think the one thing that perhaps has changed with this week's results is that clarity about a domestic regulatory framework in the US might be a little bit closer than it might otherwise have been. And clarity about domestic frameworks is really important because that gives people confidence to invest and to build.
That's true. Very, very well said. Well, let's get back to the topic of the day. Now, we put a big, ambitious goal there, a billion wallet. Somebody put a question, why not 2 billion? Just now as it came. As a central banker, we believe real economy use case drive that outcome. You can have a billion ambition, but we need to have a real use case behind it. I'll go with you, start with you. Where does that use case out there, what is that use case out there which will drive that billion wallet owner of this space?
I think it's stablecoin. Of course, every
and
hammer.
Why stablecoin?
And every hammer sees a nail, but I really believe that the point of stablecoin is you have 24/7 instantaneous movement of money, basically for free, and is programmable and operating on the internet. And so you can get to a billion no problem. I think one of the interesting things is in 15 years, you've had a penetration rate for smartphones that has surpassed the penetration rate for bank accounts. It's actually in some ways sad too. Stablecoins don't actually need to operate through a bank account structure. That allows them to have a much more viral and open effect. And really, ultimately, it shouldn't matter whether an asset is on a blockchain or not on a blockchain. It's about solving a problem. And the problem is being unbanked or underbanked. And guess what? That is like 30 or 35%, maybe 40% of the global population. That's billions of people. So I think the question is great. Why not 2 billion? Frankly, I think we're going to be at 7 or 8 or whatever the billion number ends up being, because it's just a better, easier technology to use. And if you have a smartphone, you can have a wallet, and now you can have funds movements. It's really that simple, and that's what stablecoins enable.
So you are saying stablecoin is a good alternate for cross-border transfers?
I think we're seeing it today. Absolutely, it is the killer app.
You also said that without the banking infrastructure, but as in defense of banking infrastructure, there's a KYC, money laundering, checks, the whole set of regulation which has to be managed. Where do you see that coming together?
Well, I don't think that changes at all. I think you need to have the AML KYC, and you can do that in both the on-ramps, the off-ramps. You can do that through chain analysis. You can also do that through partners that using the stablecoin. There's always going to be centralized institutions. If you really think about it, how many people are going to want to be able to hold their own keys? I actually don't think it's as much as people think, because you use institutions, so you don't have to think about things.
Okay.
And it's going to be the same thing with keys.
So well-regulated stablecoin.
I think that is, of course, what we would like to see, yes.
And you don't mind strong regulation, controls, checks, and that can bring friction.
Well, it brings some friction, but I think ultimately if you want to scale to societal-wide levels of usage, which is what we're talking about, not just being for the crypto industry, but for the entire world, you're going to have to be able to create that level of confidence.
Somebody made an interesting comment. I was in India, Sarah was there together. Why do you need a stable behind a coin to make stable coin look stable?
Well, you really don't. I mean,
It's a bad word. You need a different term for that.
I mean, look, unfortunately, the weight of history is something we're fighting against here, and so they're calling it a stable coin. But really, at the end of the day, it's no different than any other type of, say, dollar or fiat currency. It's just on a different database.
I see.
And why are we talking about databases at the end of the day? We should be talking about what problem you're solving.
Indeed. Switching to Eric, one compelling use case for a billion wallet, now 2 billion.
Yeah, we're already at 620 million wallets out there in the world, so I think we're quite close to one we should aim for higher. I'll actually expand on Chad's use case. In Crypto.com, we started as a payment company. So I think broadly the payment use case is the one that gets us to mainstream adoption. Stablecoin is part of it, but I think it's broader. And you need to get people into the space first with products they understand and they know, with clear benefits. That's why when we started and tried to bring more people to the industry, we use a card.
Eric, just stop. I think there's a great question to that, educate people. So please, I'll take that question and continue. But there's a question here, how do we educate people for the Web3? Yeah, continue. Sorry.
You want to answer that now?
No, you continue with that.
Sure. Yeah, that's a great one. I think education and consumer education and consumer protection is very important for us to scale, right? But on the payment front, there's many ways to do it. One is something that people understand as Visa, MasterCard, the usual networks. And we built over the years the most largest platform for credit cards, right? And it's available in 4 continents, and people can really spend everywhere, those networks are accepted. But next is native acceptance. So as a merchant, I can accept crypto directly. It doesn't go through the traditional rails. Then we can achieve that vision where crypto can be used without all these intermediaries. That's Crypto.com Pay, that's many of the solutions that are out there, native crypto payment. And then it's 10, 20, 30 years of building that merchant acceptance journey that we're going through. Remittances is key. Stablecoin will play a big role. We also have instant free transfer across 100 million users today. I think that's a great way to get adoption.
I think remittance is the key, but once you have the money, we need market to accept and transact and purchase goods and services.
Yep.
Where do you see that going? Because the market infrastructure has to support the ultimate transaction of goods and services.
Yeah, I think we have a role to play, but I think in general, in the interface, especially between traditional money and digital money, we need to build strong regulated platforms that can enable that as smoothly, efficiently, and less costly as possible. So that's one of our role, and working with traditional finance partners as well to make it happen.
Okay, Monica,
I'm going.
you have an XRP.
I'm going to double down on the payments. Payments is the killer use case. And to answer your question, I think the answer is through how we get to billions of users on the using blockchain for payments is through partnership with the existing system and the existing players. That's where the market infrastructure is. It's well established, and it's about making sure for the end user the experience is safe and secure, it's reliable, and it's an easy user experience. Today doing it all yourself on blockchain is not the easiest. So I would expand beyond the remittance use case, which I think is a great one, to also include merchant payments. We serve merchants, for example, in Asia who are trying to accept payments from customers in Latin America, for example. And using a US dollar stable is a really efficient way for them to accept payments or to even pay their suppliers in China. So yeah, I would say partnership with the existing system.
There's a question for you. Do you believe, the question is, do you believe Ripple will launch a commercial daily business flow, at least with one bank and one Forex company by 2025?
I'm sorry, do I believe?
One bank, at least one bank and one Forex company in 2025, a commercial daily business flow.
That they will use in commercial daily business flow. I do. I'm optimistic about that. I mean, even just look, and I think the key is regulatory clarity. Back to how we started the whole thing. Visiting Singapore, you see banks like DBS, like dominant banks who are actually doing real stuff in this space.
So you need a bank somehow to be part of the chain, right?
I think, yes, I do believe that banks are going to be cornerstones of the future infrastructure.
Okay, so I will hold that question. I'll come when it's come to Sarah. We need a bank, a regulated bank, to be part of the value chain. You can't just ignore it, especially merchant payment, settlement, all those things. Richard, you have been in this space for long. Where do you see the billion use case?
Well, I think, first of all, if you take a step back, the pace of adoption really came about regardless of whether there were regulations, right? So I got involved around 2017. If you look at this particular asset class, none of the institutions and regulators were looking seriously into this space then. It was just a retail adoption, right? And every other asset class has gone from instis to corporates to high net worth and then retail subsequently. This has gone the opposite direction. It was embraced by retail. There's a lot of education. And that came about why the use case came across so strongly. I agree with all the rest of the speakers have mentioned in terms of stable coins, remittance, payments, etc. It's because there was a lot of pain point, a lot of frictions within the banking rail, right? So if you want to do remittance, I traveled the world quite extensively. In many parts of the world, financial inclusion is very low, 10, 20%, meaning people have no access to payments, no access to banking, or it's very, very expensive for them to do so. Crypto has done that at a fraction of the price, instantaneous basis, right? So if you do remittance via banking, you go through 1 or 2 correspondence bank, your money ends up 2 or 3 days later with the recipient. With crypto, it's instantaneous, right? So you get that.
Richard, I'm going to push you here because one of the challenges in that theory is that if I'm holding crypto, if the graph is going that direction, why should I transfer the money to you? So because there's two part of the money. One is the price fluctuation is an investment, quote unquote, thinking, and there's a actual money transfer.
Yeah.
So there is a friction in that whole thinking. If it is a speculative asset, you really don't make it an efficient payment instrument.
Not really.
You have a problem
if you
there.
think about it, right? So there's a lot of arguments that crypto is not a good store of wealth, right? For instance,
It's unpredictable. The prices are.
It depends on what you're comparing with. So even if you compare with the US dollar, it has outperformed US dollar right? For the longest time, if you look at price performance. But I have been to many parts of the world. We have many users, and the users all come up to thank us, to say, look, if not for you guys, we are holding to a huge depreciating assets in terms of their local fiat currency for the longest time. For the last few years, many of the economies have gone through hyperinflationary situation, right? So they are much better off either holding to stable coins, US dollar stable coins, or even holding to things like Bitcoin, right? So they are in a much better off position. So I would argue against it. Store of wealth is subjective. Investment, again, do your own research before you go in. There are risks involved. But as a payment tool, as a remittance tool, I think it has huge transformational ability on that front. Yeah.
I see.
Yeah.
Now, Sarah, I think we central bank have our own definition of how we see this space. We have a retail CBDC, wholesale CBDC, tokenized deposit, some market well-regulated stablecoin. And that's the scope of digital currency we are thinking. And we have a certain view of use case, remittance, cross-border payment, settlement. Your take on, not necessarily on the privately issued money, but your take on the whole billion possibility.
So it's really clear that these technologies, shared ledgers, programmable money, atomic settlement, tokenization of securities, together, these technologies can drive real benefits in wholesale markets and in retail markets. You can get rid of complex manual reconciliations. You can increase the frequency of settlement cycles. You can increase the ability to monetize assets. All of that is positive in wholesale. In retail, we've talked about the values cross-border in particular. You can drive money into the digital world and make it cheaper as well. All of that is really good. Those are real world use cases, and there'll be millions of use cases that we can't see right now. But I did want to bring it back to the point that you were making earlier, Sopnendu, about how important it is to consider the risks as well as the benefits here. We're talking about money, confidence in money. In order to have confidence in money as we innovate, it does mean that we need to have central banks and regulators playing an important role to ensure that we get trust in money regulatory approaches that give that whole mixed ecosystem of central bank money, tokenized deposits, stable coins, a foundation on which to build. We mustn't let the benefits get ahead of the regulatory regime.
We should not get benefit go ahead of regulatory requirement. Strong statement. Thank you very much. Well, that's the principle on which we'll operate, because if this industry has to be regulated, there are certain expectations. Now, I want to switch to a very different discussion. Now, all this requires infrastructure.
Like some water?
It requires infrastructure, it requires network, which regulators can have a sense of that, custody. There's a whole set of risk on that backend infrastructure. It's fragile, cyber attacks, hacks happens on the wallets. Each of you, your view, how do we go forward with this? I personally believe it's still a very fragile infrastructure.
Well, I think I couldn't agree more. I mean, we're in some ways just in the beta stage here. It's very early in terms of how the chains are operating, different databases. This is something that people are working very hard on. But if you just tried to take and put the whole financial system onto blockchain technology, almost all the chains would break today.
Absolutely.
Right? I mean, I think that's
the big issue now.
Yes. But at the same time, I think that these are engineering challenges.
Yes.
We're not going to some place that's impossible.
Why market is not incentivized to put money and build this infrastructure in a thoughtful way? I mean, that's what GL1 and all these things, MAS is working on, a market infrastructure to get it right. So where do that, how do we get there?
Well, I mean, there's been an enormous amount of private capital that's come in to fund build out of chains, build out of custodians, build out of all kinds of different businesses, public markets in certain cases, and you're talking about hundreds of billions of dollars of market cap in companies and trillions of dollars on chains. So I do think the capital is there and it's coming in, and the amount of developers that are working continues to set new highs all over the world that are. But some of these things just take time. The internet's not built in a day. You didn't get to 1 billion internet users overnight.
At least in internet, you're moving messages. You're here moving money. So quite a different.
But it's messages. It's just very valuable messages.
Yes.
But it is really no different than an email.
Okay. Yeah, I agree. I think, but still, there's a bit of uncertainty when you're actually moving your financial wealth across the network. I buy that. I think still that's a big part. You can have a exciting asset going through the roof, but when we transfer that asset on a network, we're still not sure that network is good enough. Eric, exchanges are always subject to all kind of risk. Where do you see this going?
I think the basic infrastructure for large players to come in relies mostly on custody and liquidity provision. That's the start, and that's where most big players come in. And I think we've made a lot of progress on that. We had the technology that evolves, MPC and others, and now most people are building qualified custodian that are properly regulated, where people can store safely their digital assets at a kind of institutional grade level. So I think we've made some good progress, and the trajectory is there. Qualified custodian, whether it's a trust or a different structure across the world, is a good base for people to feel safe, especially for large corporations. And the next is liquidity. And I think we're getting there. I mean, if we look to do, especially today, on the bigger asset, Bitcoin, ETH, maybe even Solana, we have very deep liquid market. I mean, we trade, for example, on our platform about $250 billion of volume per month, right? And you can see that in other platforms. There is deep liquidity for people to move in and out, to take position. And I think that's reassuring for the markets. For sure, on the technology front, there's still some progress to be made, so we can get that velocity on-chain, that certainty and finality, at the same time protect the decentralization of the networks. Takes time, but I think there's a lot of innovation happening, and people will start with the safer order chain. They may not be as efficient, but then progressively will evolve with a more innovative, higher scalability chain as they get more battle tested.
Still a long way to go. We have to get it right. Monica?
I agree. Blockchain scalability is an evergreen engineering challenge. We have to always keep investing, always keep pushing the upper limits of that. But beyond just the technological challenges, there's also how this works within the fabric of the existing financial system. So key are on and off ramps, being very easily and seamlessly able to go from fiat currency on chain and off. So again, those bank relationships, integrations with existing payment networks are critical. And I'll also add solving for on-chain compliance.
Yes.
Yes, if you apply compliance rules and regs at the gates, that's a great solution. But even in on-chain, there's all kinds of really interesting things you can do. For example, trading on a decentralized exchange. And so I think it's like the next frontier of innovation for the blockchain community to solve for, is applying things like decentralized identity for on-chain transactions.
I see. Now, there's a question here. There's still a market worry about the network's energy usage, because this network needs a lot of energy. There's a lot of ESG negative implications. Any thoughts on that? Just anyone before I go to Richard? Do you think that's still an issue?
No, I just want to address some of the points that you mentioned just now, right? Before we move on. I do think that a lot of vulnerabilities are also sometimes introduced by regulations, right? Because of a lack of understanding of this sector enough. So I can share with you a conversation. I go around the world talking to regulators. I actually have regulators that try to force-feed crypto into their existing securities.
This lack of understanding, just to be clear, regulators or the industry?
Regulators.
Oh, okay.
Regulators.
Okay.
So I can explain to you why. So I just share with you this conversation, right, with one of the regulators around the world. They're trying very hard to understand the framework and the model, right? And they said, look, you need broker-dealers, right? You need to go through onboarding through broker-dealers, people come to the exchange. I said, no, people can come to us directly. We can do KYB, KYC. They said, who is doing your clearing and settlement? What's the clearing settlement? What are you on T+2 or T+3? I said, crypto is instantaneous, right? So the clearing and settlement risk is not there. So there is a huge, in many parts of the world, there's still a huge gap trying to force-feed crypto into the existing regime. And one of the vulnerabilities, if I can share, is if you look at this year, there are quite a lot of exchanges that will hack, right? Including WazirX, which is a large Indian exchange, will hack for $200 million, right? And people argue that you need third-party custody to safeguard assets. They have third-party custody, and those are licensed, and it happens, right? So sometimes the vulnerability come across because you don't have control of the entire value chain, which is what I think a lot of education needs to go through with the regulators on that front to highlight where are the vulnerabilities, but also where are the innovation coming through on this case. For example, we publish proof of reserves, where all the assets of the users are held, right? Full transparency. I can tell you that none of the traditional financial institutions are able to do that on that front, right? So there are a lot of innovations that can solve problems, that can manage the risk, but there's still a big gap in terms of understanding.
I see. Now, you have a regulator on the side of you, so I'll go to her. So there are two parts of the question. One is the industry itself believes there's a long way to get regulatory alignment because the tech stacks, the principles are different here in terms of against a traditional financial system like clearing and settlement. Plus, there's also a wide range of regulatory views at different levels across different countries. So there's a twin problem, at least. As a moderator, I'm framing it. How do you see this going ahead?
Let me answer that from a UK perspective, and then I'll go global after that. From a UK perspective, we've been seeking to identify areas where we need to be agile, where we need to think about amending the regulatory regime as a result of the particular issues that these technologies bring. And we've launched a digital security sandbox in the UK in September that is designed to explore how DLT technology can deliver finality of settlement, which, let's be clear, is the foundation on which the entire financial system is built, in a way that our regulation can support. We've also launched a regime to deliver security and stability for stablecoins. For those that want to be used widely for payments, we need confidence that a pound in a stablecoin is worth the same as a pound in a banknote, it's a pound in a bank deposit.
The singularity of money.
Exactly right. That singularity of money, same risk, same regulatory outcome, just applied in a different way to stablecoin, and we've proposed a one-for-one backing regime with central bank reserves behind it. So I think those two examples show how regulators can look at what the benefits of these technologies are, what's different about them, and try and develop a regime that delivers that outcome. I'm pretty positive that there's been decent debate internationally about these issues. The stablecoin regime was one that has been agreed globally around the world, but I absolutely understand that we're all learning and we need to be agile, but I do think regulators have done a pretty good job so far, at least in the UK.
Any global perspective difference, you think?
So it is certainly the case that different regulators are at different points in the journey, but I think all of us are sharing experience. There have been how many people here at the festival from our worlds here this week, and that tells you how much people want to share and understand each other's perspectives.
Absolutely. Now, this is not something I was intending to ask, but I think we have an obligation, and this is an issue for the industry. Fraudster, scamster, every bad actor I can see have come to the industry. We can see that scamsters are all over the place. Anybody wants to make quick money, they think crypto is the best industry to go. Yeah. Consumer protection is a big issue. Advertisement beyond, the advertisement of crypto is just insanely inappropriate. As an industry, your thoughts around consumer protection. I think that's something is a huge, huge risk for the industry.
Well, I mean, I think it's just like every other industry.
You have attracted more fraudsters than anybody.
I think that's maybe that's the case. I mean, if you kind of look at the the ability for someone to use this technology for money laundering or for other types of scams, and you kind of compare it to what happens in fiat, it's still a small piece of it. But I do think if you had more clear regulatory rules of the road for certain crypto projects or tokens that were launched, I mean, there's 70,000 of them. I mean, if you could have a regime where you could differentiate between those who are following a set of standards versus not, I think that would be very helpful. And I think the industry could eventually get there on its own, but there is mechanisms and an opportunity here for regulators to step in and do that.
Absolutely, and I do see, but at least there is an issue, and as an exchange, how do you ensure that you don't have this fly-by-night operators showing up?
I do agree. We need to have some proper consumer protection, and you can see across the world most regulators have enhanced the initial framework. They were focused on money laundering and technology risks.
Especially retail customers. We just want to double down the friction there.
That being said, you need to look at what's happening in the world, and in some part, the consumer protection becomes basically a deterrent for anyone to participate, and is killing the industry. So we're really pushing for more risk-based approach. You want to buy Bitcoin, you want to buy a 100x leverage product, it's not the same. So we have to be a little bit more risk-based approach. And the second is, a lot of people now are applying and getting licenses. Even in Singapore and other markets, there are frameworks. But they need to be able to communicate that they are licensed players, that they are doing things the right way. And sometimes it's not even possible. So I think there's a balance to be found, the right level of risk-based approach for consumer protection, and the ability for regulated players to communicate, at least about their offering, or even the fact that they are abiding by those constraints. Yeah. And to your question, I think scam is a big issue across the financial industry. It's not specific to crypto. And there's many things AI can help us
I get
solve
that,
some of these issues.
I know the crypto industry justified by saying the volume comparison, but I think as an industry, irrespective to whom you compare with, there's a fundamental obligation that if the industry want to succeed, they've got to get the consumer protection right.
That's right.
In my view, sorry, I should give my view, I'm a moderator here, there is a need to be extra step there to get it right. It may sound extra friction, there's a need to get that with some extra caution there. Yeah, sorry. Before I respond to that and go to Monica. Sorry, go ahead.
No, I agree. And I mean, you can see the platforms that are here today. You said there's about 70,000 projects out there. We only have 300. So having a strong digital asset evaluation framework, doing that due diligence before you bring projects into your platform, into 100, 200 million users, we have that responsibility. And I think we have to do that work for sure.
Monica.
Yeah, responsibility is key. That's such a key word. I do think it's a problem. And I think AI is also exacerbating the problem, making it even broader and harder to stay on top of or get ahead of. I would love to see, we at Ripple, we invested, our own dollars into market education and marketing tools to get the word out about, keep your eyes and ears open for scams. But we also would love to partner with more players in the industry and with government agencies who can, so we have kind of a network where we're able to report and take action on fraudsters. I think it's a problem. We got to get more ahead of it.
Richard, I know you are the biggest exchange. You have a huge responsibility to get it right.
Yeah. And I'm going to push back on that hypothesis, right, that you put across.
Okay.
Because I'm sure every one of you here has gotten scam calls. Every one of you here have gotten scam SMS. Transferring bank money, etc.
It's not a whatever tree. It's about your industry getting right.
Absolutely. So before I move on, I'll move on to the industry, right? So, I mean, Singapore Central Bank has published a report earlier this year to say that majority of money laundering actually happens through the banking channels, right? The fiat channels, right? So just let me set that as context. So what are we doing as industry? I mean, I can just say for our own firm, right? So we have invested very heavily into security, and this is over and above what the regulators have prescribed, right? So this year alone, we have helped our users avoid up to 2.4 billion of potential losses, right? For transfer to things like poison wallets. We can detect them, we prevent all those transfers coming through. And because crypto is a traceable technology, unlike fiat, right? It's much easier to trace. And we work with law enforcement agencies around the world to really fight all these frauds and scams. And this year alone, we have helped our users recover 73 million worth of funds from all the fraudsters and the scammers, right? So I do think that, yes, there are in any industry, there'll be fraudsters, there'll be scammers, but this technology, this innovation, allow us to detect it better and actually allow us to protect our users better by working with law enforcement agencies around the world to recover funds.
I see. Sarah, consumer protection.
So look, this is all about trust and trust in money without having that foundational work to ensure that fraud and scamsters are driven out of the industry. It's hard to imagine that this will build in the way that industry wants it to.
Mm-hmm. Now, we have 5 more minutes left. Role of banks. Do you see banks playing a role in the industry?
Absolutely. I mean, they're a prime mover right now, and their role will certainly evolve over time. And you can even start to see unbundling of certain types of banking services, because you can have different business models that work when you start having money that can move outside of the banking system in a free and efficient way as electronic money. Today, if you have electronic money, it has to sit in the bank.
Mm-hmm.
That's not the case in the future. That's what stablecoins and CBDCs would enable. But on the other hand, banks are where all the customers are.
Mm-hmm.
Banks are where all the assets sit today, and it would be silly to think that you're not going to have them play a foundational role in the transformation for how people can be able to access new types of assets, as well as be able to access traditional assets in a new way.
I see.
I completely agree, and I think it's going to be a journey for banks. Initially, they will start supporting, as they've done over the years.
Just explain what supporting means.
So it starts with just giving corporate operational accounts to crypto companies, right? As the start, step
Give
one.
a bank account for the crypto company to do business.
At least to pay their employees. That was the beginning, and I think more banks are doing that. And also get them to know the players in the industry and get more comfortable with them. And second is client money accounts. So we actually can use the banking system to move money in and out, and that bridge you're talking about that we want to make as seamless as possible between traditional money and digital money. And then we talked about custody. That's usually the first step, that when banks want to get their hands dirty into the space, build their own custody or work with someone to do custody. And then it moved to actually trading, taking positions, maybe treasury positions, and then at the end offering to their customers.
Creating a market for you to trade. Is that what you want banks to do?
No, we are here to support banks throughout their journey. I think we have a lot of experience all over here in this panel, so we're keen to work with them. We have almost 100 banking relationships across the world. We work with banks every day, and we're keen to see them doing more and more and support them through that journey.
I see. Monica?
Totally agree. I mean, banks are the bedrock of the financial system. They custody and move hundreds of trillions of dollars of value. And they are trusted by customers all around the world. So yes, they will be, again, the bedrock of the future financial system, and it's a question of how to get there. We've talked about it some different ways in. We see a way in through custody. So we serve large banks around the world with a self-custody product. And just starting there, they are keen on then working on tokenizing assets. And that's projected to be a $16 trillion market within the next few years. Mm-hmm. And so from there you can see tokenized assets, then it gets to liquidity, it gets to payments, so you can see the use cases building.
So there'll be convergence, right? As all the other speakers have mentioned, banks are integral part. They support the system, custody, client money account, on-off rails, etc. And I do see more and more partnerships around the world on that front, right? And you start to see traditional financial institutions getting a huge interest in the crypto space. You're going to see quite a fair bit of M&A activities coming through, right? Of large financial institutions trying to possibly not only experimenting with things like tokenization, but also trying to get a handle of the opportunities in this space and acquiring some of the crypto asset players on that front. So I would see that trend going forward.
Well, we have a little over a minute left. What can stop that 1 billion dream?
I think something on the security side. I think that's it, is somehow the technology fails.
I see. The information security, the cyber security will be your biggest impediment for the billion wallet.
But I think that's that's the biggest risk. I still think that's very small. I think it's completely inevitable that we
I
get to a
see.
billion.
Eric, what will stop the billion ambition?
I think the use cases are here. So maybe if we're not able to educate or communicate the value of what we're doing, I think this is where we'll fail to scale.
Consumer education will be the biggest impediment.
I think I agree. I think it's unstoppable. This is the future, and so it's a question of not what will stop it, but what could slow it down, and it's the pace of regulatory clarity. And we were speaking earlier about global frameworks. We love to see and be a part of public-private collaboration, like what
Yes.
MAS has led, and how MAS has also brought in central banks from all over the world, so that we can get global consistency with regulation.
You have two central bank between you, so.
Yep.
So that's how we collaborate. We have both sides of the end. Now, regulatory clarity from you. It can be an impediment for the growth.
Yep.
Richard?
Everything of the above, right? So regulatory clarity. But I don't think you can stop the momentum. If you look at the young adults and youth today, their first investments is not into stocks anymore. It's into crypto. If you go around the world.
I mean the next gen, new gen.
Yeah, the new gen. I mean, they are very, very savvy in this space. So, I mean, you have to get it right in terms of cybersecurity. The new use cases, the innovation, the utility has to improve, has to get stronger. But I don't see it stopping. The momentum is there. And every industry where the youth, young adults are in a big way is going to be the industry of the future.
Last word.
So you won't be surprised to hear me say this. It's if we lose trust, if we lose confidence in this as a means of payment and as money, this whole thing is in danger of collapse. In that context, what I think is the single most important thing is ensuring that there is singularity of money, that a pound in stablecoin, a pound in tokenized deposits, a pound in central bank digital currency, a pound in our wallets is always worth the same. That will give us the confidence to carry on.
Thank you, Sarah. You know, all your listing you made, you just didn't use word private money. So anyway, we still have a long way to go, but I think there is a momentum. I think we should look with some optimism that we'll have a billion wallet digital currencies, and hope that's the bedrock of future of finance. Thank you very much.
Thank you.
Thank you.